I used to struggle with one of the most common pitfalls in trading, closing profitable trades too early. Every time a trade went in my favor, I felt a surge of fear. Fear that the market would reverse, fear that I would give back my gains, fear that I wasn't allowed to be right. This fear made me exit prematurely, leaving profits on the table and reinforcing a cycle of frustration and regret. Holding a winning trade longer is deceptively simple in theory, but profoundly difficult in practice. It requires discipline, patience, and, above all, emotional control. Every profitable candle tempts you to lock in gains, yet every professional trader knows that letting your profits run is where real edge lies. The first lesson I learned was that fear of losing profits often outweighs the joy of making them. Psychologically, humans are wired to avoid loss more strongly than to seek gain. This natural bias, called loss aversion, explains why most traders cut their winners to short and let their losses run. Understanding this cognitive bias was my first step toward change. Professional traders approach winning trades differently. They define their risk and reward parameters in advance. They know exactly how much they are willing to let a trade fluctuate, and they accept that short-term fluctuations are irrelevant if the long-term trend supports the position. This foresight reduces emotional interference and allows trades to breathe. I began keeping a detailed journal of each winning trade, noting how long I held, what emotions surfaced, and what prevented me from letting the trade run. Over time, patterns emerged. My early exits were consistently triggered by anxiety, overthinking, and impatience. Recognizing these triggers allowed me to intervene before fear dictated my actions. Another critical insight was separating ego from execution. I realized that taking a profit too early often came from a need to be right in the moment, to confirm my analysis was correct instantly. Professional traders detach from immediate validation. They trust the plan and accept that short-term outcomes do not reflect their skill. A practical strategy I adopted was using trailing stops and scaling out gradually. This allowed me to protect gains while giving the trade room to continue in my favor. It became a structured compromise between caution and opportunity, reducing stress while maximizing potential profits. Patience is cultivated through repetition. Every time I allowed a trade to run longer than my fear initially wanted, I reinforced my ability to stay calm under pressure. The process is gradual. You don't transform overnight. You slowly retrain your mind to embrace the uncertainty inherent in every market move. Another aspect is observing without judgment. Each profitable move is data, not validation. Watching a winning trade fluctuate is normal. Professionals recognize that the market moves in waves, and temporary pullbacks do not indicate failure. By seeing volatility as neutral information rather than threat, it becomes easier to hold positions longer. Holding winning trades longer is not about greed. It's about rational calculation, emotional resilience, and adherence to a well-defined plan. The market is always offering opportunities. The goal is to capture them without letting fear or impatience interfere. Over time, my relationship with profits shifted. I began to view each winning trade as a test of my discipline rather than a source of immediate reward. This mindset reduced stress and improved my decision-making. By detaching from short-term outcomes, I was able to capture the full potential of each move rather than leaving money on the table. The key takeaway is that emotional control creates freedom, fear constrains, patience liberates. Every time I consciously chose to let a trade run, I reinforced a mental habit that compounded over time. This habit became the difference between sporadic, limited gains and sustained, meaningful growth in my trading account. Ultimately, mastering the psychology of holding winning trades longer is about personal transformation. It requires honesty, reflection, and consistent practice. Every trader experiences fear, but few develop the mental framework to act in spite of it. Those who do gain a profound edge, their results reflect skill, strategy, and disciplined patience rather than impulsive emotion. Trading is not about predicting perfectly, it's about managing yourself. By learning to let profits run, you build not only financial gains, but confidence, resilience, and a professional mindset that lasts beyond individual trades. This shift in perspective is what separates average traders from consistently profitable ones.